One of the things that I thought I'd start off with is analyzing just a little bit about an intraday setup that we can learn a lot more about by applying some of the multi-day code from last week as well. And then start talking through how this exemplifies a little bit of our trading plan for the day. Not every trade is going to be quite this clean, quite this big, quite this easy, but this is what we're looking for, particularly of the trend variety. So I see, 2 or 3 clean opportunities here for trade. We're referring specifically just to the intraday VWAP for right now. We'll get into the multi-day VWAP stuff, as I said. First opportunity is the retreat back to volume weighted average price, making for a nice type 1 short mid-morning. And then as the pattern broke lower, when I say the pattern, I'm referring to this kind of a flag. Look at the point of breakage. It's right at the deviation band, offering a nice type 2 short opportunity. And you remember me saying this somewhat before, that a type 2 short does not have to move away from the deviation band and retreat back towards it. It can be a cross into the fast lane as well. So let me draw that brief example. Let's say we have a declining volume weighted average price, have our deviation band, and as the market kind of wobbles around that fast lane divider, as it crosses, we don't necessarily need to wait for it to pull back to give us a perfectly safe entry. If we recognize that there's been a lot of prior support that no longer exists, as we break it, it becomes resistance, I'd rather you try and get aboard that trade quickly with a stop just over the last structured high in that kind of wobbly consolidating pattern, right? So that's the same opportunity we see here as it spills lower out of the flag. Notice also that we have a declining strong slope for most of the day. Let's actually draw that in as well. There's a brief period of flattening. You actually see down here on the indicator that it somewhat goes back to neutral slope. But that's because we're kind of stuck in the slow lane for a brief period of time. Notice that the real activity, the real directional movement occurs, this is not rocket science, by the way, in the fast lane. When we're stuck in the slow lane, sure, there's an opportunity for entry, but we don't really know if this is just going to go down to the -1 deviation band or if it's going to continue lower. We get that confirmation not only with the price break, but the picking back up of slope, which gives us more and more inertia or likelihood to continue throughout the day. Now notice when we're referring to stops, we don't necessarily need to give it a ton of room, especially when it respects either the VWAP or the deviation band so cleanly. What I mean by that is I typically recommend a quarter or a half deviation on the other side of the volume weighted average price or DEV band as far as a stop. So if your entry was somewhat near the volume weighted average price, you give it a little bit of wiggle room. However, as the trade develops and we cleanly reject off of the VWAP or aggressively start moving away from the deviation band, why do we need to give it a full half deviation of risk? Why do we need to wait around for the trade to potentially move up and damage us when it's already showing us that it's confirming and moving in the appropriate direction? So we could quickly kind of ratchet that stop down to be effectively a break above that prior high, or the high at which kind of coincided with the volume weighted average price. We're not going to know that in the moment. We can't put our stop a penny away in the moment. But we can, as the trade develops, pull our net risk down to near zero. Now, I'm not, again, saying you'd enter perfectly right at the VWAP, but near zero. One of the things we'll get to is the fact that inertia, kind of as I described it, the momentum or propensity for VWAP to keep moving and doing whatever it's doing, means that these are naturally developing kind of trailing stops in our favor during a trend that's working, in the direction we're intending it to. Notice that the VWAP will continue to drop throughout the day. So even before this major breakdown, our stop is effectively getting lower and lower and lower in our favor. Same with the deviation band. If we were to take the trade entering near or just after the breakdown from the deviation band, as this dashed line or dotted line gets pulled lower and lower, even if that were our stop, I don't know if I'd give it a full retreat back up to the deviation band. We'll talk more about that in a minute. But it's naturally being pulled down in your favor. So it kind of reinforces solid trading principles by visually describing your stop getting more and more favorable as the trade moves in your favor. So now let's take a look at how using multi-day VWAP analysis might have helped us a little bit to better understand this trade. So we've already got a couple signals: a declining volume weighted average price, respect of the VWAP, kind of traditional technical analysis pattern, a flag. After a strong breakdown of the VWAP, we didn't really discuss this, but it gapped up with the market. Broad market had a big gap up, right? It tried to break higher and then could not survive at the VWAP. So that was our first clue that there was some bearishness. Rejection at the VWAP itself, around 10:30 or so, second clue. And then the forming consolidation or a flag that breaks lower into the fast lane, that would be, I guess, our third clue, if you will. What if we used multi-day VWAP? So our first kind of usual suspect, if you will, is we're going to apply the prior day's volume weighted average price. So we're going to use a days ago VWAP set to 1 day ago. And in this case, we're going to turn off VWAP signals. So that's going to make it a monochromatic VWAP. That'll make it easier to see. And when we apply this study, it's going to look a little wonky at first, but bear with me as I scale this chart again. Notice there's some additional pretty significant clues that are occurring based off of yesterday's volume weighted average price. So all we're doing is we're trailing the VWAP onward into the next day, same with the deviation bands. And that's what's going to be really critical, particularly on this chart. Look at this, VWAP, deviation band, respect, multiple times. You could even say somewhat right in here before it breaks down. But there's almost a kind of a confluence, or like really it's the flag that we described before. Sorry, I'm drawing this freehand, so I apologize. These aren't straight lines. But you can see here that what we're experiencing is the kind of macro support from that prior day's rising 1 deviation band, macro resistance from the intraday VWAP. We're being forced or kind of funneled in between those two major areas of support and resistance. Therefore, the breakdown that we see occurring at the intraday deviation band is kind of occurring at the same breakdown of the 1 deviation band from the multi-day VWAP. That's what makes this such a powerful trade. Not only does it come down to the multi-day VWAP or to yesterday's VWAP right around here, it cuts right through it, and look at where it goes down to, the negative 1.0 deviation band. Now, I'm not necessarily saying this is a trade you would have held from this dev band across all the way down to the negative 1, but look at how it's abiding by or respecting that VWAP, meaning the multi-day or the larger day's VWAP. Just to keep this extra clean, so here's the kind of bigger picture 2-day VWAP all at once. Do you see how the area where we got into the fast lane led to a lot of touches on that VWAP before it finally broke down? When the breakdown occurred, first target right at the volume weighted average price, next target if it crosses, negative 1 deviation band. This could almost be an intraday VWAP chart if we didn't know there was a day divider right in the middle. If we didn't know there was a gap up and a bunch of trading that happened overnight, etc. Do you see how what we're doing is we're learning principles off of an intraday chart that we're then applying to even bigger time frames? So let's go back to seeing the intraday VWAP as well. Unhiding that study. So we've already seen the benefit of the prior day's VWAP and the deviation band respect, kind of adding, don't want to say support, adding credibility or credence to that breakdown that occurred. But what if we also applied a VWAP from something like a critical low all the way back here? So what we're going to do now is I'm going to go in and apply low VWAP from 3 days ago. Now I've already kind of preset this chart, but notice I'm using days ago because that's quicker to count backwards. I'm setting it to 3 days ago with the low VWAP variety. And we click OK. And look at what pops up. So it's a little hard to observe at first, but notice that we're launching a VWAP from what appears to be a significant intraday low. I wouldn't necessarily trust the actual lowest low on this chart in this case, just because it's kind of a rocky low right at the start of the day. There's clearly much more developed trading happening throughout the mid-morning and mid-session. Launching a VWAP from here explains a bit of why we pulled back to where we pulled back, for lack of a better way of saying it. Using multi-day VWAP analysis allows us to start detecting areas that are likely to act as support or resistance, but not always just in a trade entry sense. Sometimes also in a kind of a playing defense, more of a safety mechanism, how to detect when a trade might be over that you're already in. So an example would be, let's clear this. Let's imagine you had taken the breakdown of this deviation band kind of multi-set in here. You'd gotten short somewhere up and around here. Came down to the volume weighted average price, and maybe you took partial profits in here. No shame in that. Again, we don't know if it's going to bounce. We don't know the strength of the breakdown. The market was still going up quite nicely for the day. But let's say you stayed in a part of the trade, came down towards the deviation band, and you said, well, I don't know, what if this thing just keeps going? I might want to stay in that trade. Perhaps the observation that we've got a major volume weighted average price over the last several days and a significant break higher, a couple percent at least, to which we are now reverting or retreating. If there ever was a time to cover the remaining portion of your position, it'd be near that volume weighted average price. Not saying it couldn't go lower, but the likelihood of some sort of bounce or chop or consolidation around which here would be an opportune exit, that makes a lot of sense. Once we're able to see or materialize or calculate on our screen actual support and resistance from critical turning points in the market. Otherwise, we are literally guessing. We're drawing lines manually, discretionarily on our charts. The benefit here is we're letting the market, meaning all other market participants, all of the money that's being thrown around in the market, we're letting that determine where support and resistance truly exists. So here's another way of looking at this. Let's go ahead and hide these studies for a second. So if I did this right, I set up the same chart we were just looking at a second ago. So we can flip back and forth between them. So I always point out to traders, when you're starting out with VWAP, kind of ask yourself, what am I getting from VWAP that I wouldn't have had otherwise? So once you figure out the controlling VWAP set or the kind of dominant VWAP on a chart, flipping back and forth between would I have been so inclined to go short, right where my cursor is, if I didn't have that other information? I don't know. It looks like a nice intraday breakdown, but then again, without that additional kind of deviation band break that was occurring, it might have looked like we're just trying to fill the gap before rallying higher. There's a lot of additional information that multi-day VWAP is going to give us that allow us to kind of have better context for our decisions. And that's really the key. We're not trying to react emotionally. We're trying to take as much information in as we quickly and reasonably can to evaluate whether or not we really need to or want to get in this trade. So the questions you should be asking yourself, very straightforward here. 1, is this a viable ticker to trade? Should I even be considering this? So that's kind of like, is this a large cap stock? Does it appear to abide by the VWAP? Is it presenting a recognizable pattern that I can participate in? The second question, do I want to trade this? Meaning, is the pattern it's presenting desirable? Common mistake that traders make is they will make up observing patterns, even when the patterns are not truly there, because they are eager to trade. Hey, maybe this is a type 1. Maybe this is going to bounce off of the deviation band, etc. And then the third question, if those first 2 questions are both true, this is a viable trade and I want to trade this, I'm eager to trade this, there's a real opportunity present. How do I get in and when do I get out? Those 2 questions are critical, right? How do I get in, meaning which of the 4 primary trade types am I seeking to enter according to? And then when do I get out? What are the reasons I would exit, either profitably or at a loss? Every trade, I go through those simple questions. Is this even a viable thing to trade? Do I want to trade this? And how do I get in? When do I get out? I do use the multi-day VWAPs in my day trading, but because it needs to be idiosyncratically set to each chart's requirements, I tend to start with just the 1 day, meaning yesterday's VWAP, and the 5-day, 5 days ago, in addition to my normal intraday VWAP. That's my standard set. And it doesn't mean that's going to be calibrated to every chart. So I may tweak and adjust it based on what I observe with each chart. But that is definitely the starting set. And if nothing else, that's going to give me kind of a reference point or benchmark for how the stock has just been trading over the last couple of days. Forget support and resistance, forget entries or exit criteria. It's just going to give me a broad representation, kind of like a 20 or a 50 or a 200 moving average might. But rather than trusting that that's going to be support and resistance, we're just treating it as representative of recent price behavior. You know, specifically with the multi-day VWAP, as far as day trading goes, Netflix actually is a great example, believe it or not. Let's take a look at applying, which one do I want to use? I'll use this one for days ago. And we want just the prior day's volume weighted average price. So that's what we're going to be applying here. And now at a glance, this may look a little difficult with all the deviation bands, but look at this pullback right to the prior day's volume weighted average price before a big launch occurs. Now, I wouldn't argue that this is a particularly significant day, but look at how the stock traded with respect to that volume weighted average price. Broad market had gapped up significantly, but Netflix didn't. It gapped up lightly. It found some effective support right at the open at or around that volume weighted average price, rallied up and couldn't sustain it, barely came back to touch it once before a rip-roaring move to the upside. So do I traditionally or typically use prior day's volume weighted average price? If nothing else, as a reference point? Yes, absolutely.